The U.S. stock market has actually been somewhat resilient. It's been trading not far below its all-time high, and despite all of the concerns that you just reiterated, it's kind of hung in there. So I think that the underlying sentiment is that once we get beyond some of these near-term concerns, that in the second half of the year, if the economy is growing as we think it is, somewhere around 2.5%, that we could see a resumption of earnings growth and that the market can move higher. But in the near term, it clearly is a risk-off environment. The VIX you mentioned jumped up to 22 today. Just a few days ago, it was trading at 14. So that gives you some sense of how quickly the sentiment has turned negative. And I think most of it is attributable to the Brexit vote, with the polls coming out showing the Leave vote in the lead, despite the fact that the odds makers are saying that the vote will be to stay. I think people are saying, I don't want to take the chance. Let me move to the sideline. And you're seeing the impact on the dollar. Dollar is strengthening. That's pushed oil down. The energy sector in the market was down today. It's pushing bond yields down. That's hitting the financials, the banks in particular, pretty hard. So there's not a lot of good news in the very short runs. I think we're going to have to get beyond the Brexit vote to get any sort of clarity.
Yeah, absolutely. I think a lot of investors would agree with you. And clearly, just judging by the close on Wall Street today, you are correct in saying markets have been relatively resilient to a lot of that news flow. Let's talk strategy. I know you at the moment you have very little conviction from a sector level. You've downgraded your view on financials off the back of that flattening yield curve, but you have a meaningful overweight in the tech space. How do you play the market right now?
Well, we've gotten a little bit more cautious given our, long-term outlook. We still like equities, but in the U.S. primarily, we're underweighted European, both UK and Eurozone. We're underweighted Japan. We're underweighted EM. We think the U.S. is maybe a little bit more resilient economically in the short term. But as you say, at the sector level, we've more or less gone neutral because of all of these cross currents. So not a lot of conviction there in the short term. On the bond side, we don't like treasuries. We don't see any real value there at this point. And if some of these issues get resolved, you could see yields move higher over time. And as a result, we like credit better, both investment grade and below investment grade high yield bonds. So one of the things we're trying to do in our portfolios is dampen the volatility in the short run. So we've increased our exposure to alternative investments, hedge fund strategies, and the like, simply in an effort to try and slow down or dampen down the volatility that we're witnessing now.